All right, welcome to today's Explainer. We're diving into what literally might be the most mind-bending financial move of the decade. We're looking at a recent SEC filing that, honestly, left Wall Street analysts and tech insiders completely speechless. We're talking about Nvidia, yes, the chip guys, taking a massive multi-billion-dollar position in Elon Musk's rocket company, SpaceX. If you're sitting there wondering how on earth those two things connect, well, you are in exactly the right place. So, okay, let's dive into this. Why is a company whose entire empire is built on microscopic silicon suddenly throwing astronomical sums of money at giant rockets instead of, just building more chips? Diverting capital to aerospace manufacturing seems completely off-script at first glance. But, as we're going to see today, this isn't some random pivot into space exploration. It's actually a hyper-calculated move to control the absolute future of computing.
First, just think about the sheer scale of this number, $21 billion. According to their regulatory disclosures from the end of the second quarter, Nvidia now holds 122.8 million shares of SpaceX. To put that into perspective, this makes SpaceX their second largest disclosed equity holding, sitting right behind their massive stake in Intel. Nvidia is essentially acting like a sovereign wealth fund right now, using this staggering cash pile to take commanding positions in other industry titans. But how did this actually happen? Did Nvidia just log onto an exchange and click buy on a bunch of rockets? Well, not exactly.
Section 1. How xAI became SpaceX, the financial matryoshka.
To peel back the first layer of the onion here, let's trace the timeline to see how a chip company ended up with a mountain of rocket stock. It actually all started back in January 2026. Nvidia made a pretty logical, straightforward $10 billion investment in xAI, Elon Musk's artificial intelligence startup. At the time, it looked like a totally standard strategic bet on a major AI player. But then, in February 2026, Musk completely surprised the market by merging his companies. SpaceX acquired xAI in an all-stock deal that valued the combined entity at $1.25 trillion. Every single share of xAI instantly converted into SpaceX Class A stock. Nvidia's position just kind of went along for the ride. Finally, in June 2026, SpaceX completed its highly anticipated IPO, which gave those converted shares a very public price tag. So, almost by accident, an AI chip investment magically transformed into a huge holding in a public aerospace company.
Section 2. Bankrolling the miners, securing exclusivity.
Think of it like a gold rush. Nvidia isn't just selling the picks and shovels anymore, waiting around for people to buy them. They're actually writing the loans for the biggest miners to guarantee they buy their equipment from exactly one place. Which leads us perfectly to this quote from Elon Musk during SpaceX's first public earnings call. Read that carefully. Going forward, we've decided to build exclusively on Nvidia. We're exclusive to Nvidia. There's the quid pro quo. By becoming a massive financial backer of Musk's AI ambitions, Nvidia secured absolute loyalty. SpaceX committed to building its AI data centers exclusively using Nvidia's next-generation Vera Rubin architecture. This is not just some preferred vendor agreement. This is total platform lock-in for one of the most ambitious computing projects in human history.
Think about the stark contrast between Nvidia's past and its present reality. Traditionally, the hardware vendor model was simple. You design a great chip, you manufacture it, and you wait for customers like Amazon or Google to place their orders. That was the old way. But now, Nvidia is basically operating as a financier. They're taking their billions in free cash flow and injecting it directly into their customers' equity rounds. By investing heavily in these companies, Nvidia ensures those very same companies use that capital to exclusively buy Nvidia hardware. It's a brilliantly aggressive strategy to literally lock competitors out of the biggest AI buildouts on the planet.
Section 3. Orbital AI data centers, the StarMind network.
Now, let's look at exactly where these exclusively purchased chips are going, because it gets pretty sci-fi from here. SpaceX isn't just buying these chips to stick them in some standard data center in Texas. They're aiming way higher with the StarMind AI-1. This is SpaceX's wildly ambitious plan to launch a network of orbital AI data centers. Yep, you heard that right. Data centers in space. But why? Why go through the incredible engineering nightmare of putting Nvidia's top-of-the-line Vera CPUs and Rubin GPUs into orbit? Well, it all comes down to the two biggest bottlenecks in AI right now: power generation and heat. Space actually offers unique advantages for massive power efficiency and heat dissipation, which could drastically lower the overall cost of compute. SpaceX and Nvidia are literally co-designing the computing payload for these satellites right now, essentially shrinking down a massive AI supercomputer to fit inside a satellite chassis.
And if you're wondering if anyone actually wants this, the market demand for orbital computing is absolutely staggering. SpaceX is already securing massive monthly contracts from the heaviest hitters in the AI space. Get this, Anthropic is paying SpaceX an incredible $1.2 billion per month for access to this compute. Google? They signed a deal worth $920 million a month just to rent 110,000 GPUs. SpaceX is essentially becoming a space-based mega cloud provider, and the kicker is, every single piece of silicon powering that cloud belongs to Nvidia.
Section 4. The $500 billion credit cycle. Zooming out to the macro view.
To truly grasp Nvidia's master plan here, we've got to pull the lens back. The SpaceX deal, as massive as it is really just one piece of a giant puzzle. The key is understanding this new concept, compute-backed credit. See, the tech industry is facing a massive capital bottleneck. Building these giant AI data centers costs tens of billions of dollars. To solve this, Nvidia is completely rewiring how computing is financed. Instead of treating servers as disposable tech gear, they're turning AI compute into an investable asset class. Think about it. Just like you can get a loan backed by a physical power plant or a commercial airplane, Nvidia wants financial institutions to start writing loans backed by the value of the GPUs and the customer contracts, exactly like those massive Anthropic and Google deals we just talked about.
And Wall Street? They are totally catching on. As Goldman Sachs plainly stated, the goal here is to create a market for credit backed by Nvidia compute. This is a monumental shift, guys. Nvidia is no longer just a technology provider. They are laying the foundation for an entirely new financial ecosystem. They are making their compute the gold standard collateral for the modern tech economy.
And to pull this off, they've basically assembled the Avengers of high finance. Nvidia has officially recruited absolute Wall Street titans to build this financing platform. We're talking Apollo Global Management, BlackRock, Blackstone, Brookfield, Goldman Sachs, and KKR. These are literally the largest alternative asset managers and investment banks on the planet. Together, they're tasked with mobilizing institutional capital to fund this global AI infrastructure boom.
So what's the target size of this financing pool? A staggering $500 billion. I mean, let that number really sink in for a second. Nvidia is organizing $500 billion of third-party capital to ensure that anyone who wants to build an AI factory has the cash to do it. By coordinating this capital, Nvidia reduces the risk of builders running out of money before their infrastructure actually becomes productive. But it also means Nvidia is making the entire AI build-out deeply, deeply interconnected with global credit markets.
Section 5. Genius or circular bubble, analyzing the systemic risks.
Okay, let's break down the actual mechanics of how this money flows, because it forms a fascinating closed loop. Step 1. Nvidia uses its massive cash reserves to invest equity in AI companies, like that initial $10 billion into xAI. Step 2. The $500 billion Wall Street consortium provides the debt financing needed to physically build the data centers. Step 3. Those data centers take that funding and buy billions of dollars worth of Nvidia GPUs, which, you guessed it, generates massive revenue for Nvidia. And finally, Step 4, Nvidia takes that fresh revenue and uses it to fund the next cycle of equity investments. Now, financial analysts are quick to point out the concern here. Nvidia is, in a lot of ways, financing its own demand. The growth is spectacular, sure, but if the AI applications don't generate enough end-user profit to service all this debt, well, that loop could face some severe pressure. And the financial markets totally recognize this risk, which is exactly why Nvidia had to step up with a massive guarantee. Nvidia currently holds the option to backstop up to 25%, which is $125 billion, of this massive infrastructure financing initiative. Basically, if a project fails, Nvidia is willing to absorb a huge chunk of the residual risk. Now, on one hand, this shows immense confidence from Nvidia in the long-term value of its hardware. But on the other hand, it also signals that Wall Street lenders still require some serious credit de-risking from Nvidia just to feel comfortable extending these loans in the first place. So that brings us to the ultimate question. Are we building the future, or are we just financing a massive bubble? By taking a $21 billion stake in SpaceX, securing these exclusive hardware contracts, and architecting a $500 billion credit market, Nvidia has transformed from a simple chip designer into essentially the central bank of the AI economy. They are pushing human engineering to the absolute limit, literally putting AI supercomputers into orbit. But in doing so, they've made the entire technology ecosystem deeply interconnected. If the demand for AI computing holds up, Nvidia has masterfully secured its dominance for decades. But if it falters, the financial ripples are going to be felt across the entire globe. It is an absolutely fascinating reality and one we are going to be watching very, very closely. Thanks for joining me for this explainer. Keep learning, and we'll see you in the next one.